Welcome back to Business Stories, the podcast that digs deep into the trends shaping our financial future. Today, we're diving into a commodity that's electrifying the market quite literally. Forget gold's glitter for a moment because there's a new metal in town that's essential for the 21st century, a metal so crucial it's being called the new gold, copper. For our listeners, this isn't just about some shiny metal. It's about the future of energy, technology, and even national security. Here we'll explore why copper is suddenly the hottest commodity on the block, what's driving the surge, and what it means for your investments. Get ready to plug in because this is a story you can't afford to ignore. For centuries, gold has been the ultimate symbol of wealth and a safe haven asset. But in our rapidly evolving world, a new kind of treasure is emerging, one that powers our homes, our vehicles, and our digital lives. That treasure is copper. Think about it. What's the backbone of the ongoing green energy revolution? Electric vehicles, solar panels, wind turbines, and the vast grid infrastructure needed to connect them all, they all rely heavily on copper. In fact, renewable energy systems can use anywhere from 4 to 6 times more copper than traditional fossil fuel-based power systems. Electric cars? They need at least 2 to 3 times more copper than their gasoline-powered counterparts. This isn't some distant future scenario. The transition is happening now. Governments worldwide are setting ambitious targets for renewable energy adoption and electric vehicle penetration. The International Energy Agency, IA, projects that under its net zero emission by 2050 scenario, a staggering 50% of copper demand will be dedicated to clean energy technologies by 2040. Overall global demand is expected to surge by at least 50% by 2050. Adding fuel to this fire is the exponential growth of the digital sector. Data centers, the unseen engines of our internet and artificial intelligence, are incredibly power-hungry and require massive amounts of copper for their infrastructure. BHP, the world's largest mining company, anticipates that the digital sector, including data centers, 5G, and AI, will see its share of copper demand jump from 1% today to 6% by 2050. Even traditional sectors are contributing to the copper demand. Infrastructure development in major economies like China and India, along with the ongoing electrification of various industries, ensures a robust baseline demand for this versatile metal. Vedanta Group's chairman, Anil Agarwal, recently highlighted this shift, calling copper the next gold in the era of clean energy and advanced technology. He pointed to the rebranding of Barrick Gold, one of the world's largest gold producers, simply as Barrick, signaling a pivot towards copper mining. This reflects a growing understanding that copper's strategic importance in the modern economy is rapidly eclipsing that of precious metals in terms of sheer demand volume and essential applications. The price of copper is already reflecting this burgeoning demand. While gold has seen its rallies, copper has quietly been making significant gains. Earlier this year, copper prices on the COMEX surged by over 27%. In March 2025, copper surpassed the psychological threshold of $10,000 a ton on the London Metal Exchange, reaching its highest level since October of the previous year. More recently, in April 2025, copper prices in India have been trading around 848 Indian rupees per kilogram, showing an inclining trend. This is just the beginning. As the world continues its electrifying journey, the demand for copper will only intensify, setting the stage for a potentially dramatic reshaping of the commodities market. One of the most significant hurdles is the sheer time it takes to bring new copper mines online. From initial discovery to actual production, the average lead time is a staggering 15 to 20 years. This means that even if new projects were to start today, their impact on global supply wouldn't be felt until the late 2030s at the earliest. This long gestation period creates a significant lag between the growing demand and the ability to meet it with new primary supply. Adding to this challenge are the increasing regulatory hurdles, land rights disputes, and growing environmental concerns that plague the mining industry. Securing permits and navigating these complex issues can further delay project approvals and add substantial costs to new developments. Furthermore, many of the world's existing copper mines are facing the inevitable reality of declining ore grades. This means that miners have to process increasingly larger volumes of rock to extract the same amount of copper. This not only drives up production costs but also increases energy consumption and raises environmental concerns associated with waste disposal and resource utilization. BHP estimates that the average copper mine grade has decreased by around 40% since 1991, and a significant portion of global copper supply will face grade decline and aging challenges over the next decade. Geopolitical factors also play a crucial role in the supply outlook. Resource nationalism is on the rise, with governments in resource-rich countries increasingly looking to maximize their returns through higher mining taxes and export restrictions. Trade tensions, particularly between major economic powers, can also disrupt established supply chains and create uncertainty in the market. Logistical bottlenecks, including truck driver shortages, railway disruptions, and climate-related disasters, further complicate the transportation of copper and can lead to sudden supply shortages and price volatility. Environmental and social pressures are also mounting on the mining industry. Copper mining is an inherently resource-intensive process, often associated with high water usage, carbon emissions, and environmental degradation. As climate policies become stricter and societal expectations for sustainability rise, mining companies face increasing pressure to adopt more environmentally responsible practices. This can involve significant investments in new technologies and processes, which can impact production costs and timelines. Moreover, disputes over community and indigenous land rights are becoming more frequent in key mining regions, leading to project delays and potential disruptions. The closure of significant copper mines, such as the Cobre Panama mine, due to environmental and regulatory issues, has already shifted market expectations from a potential surplus to a deficit. Additionally, major copper smelting operations in China, which process over half of the world's copper, have agreed to reduce production due to a shortage of copper concentrate, further tightening the supply side. All these factors combined paint a picture of a tightening copper market. While recycling plays an increasingly important role, currently accounting for about one-third of the world's copper supply, it cannot fully bridge the anticipated gap between soaring demand and constrained primary production. The remarkable recyclability of copper without any loss of its inherent properties makes it a valuable resource, and advancements in recycling technologies are crucial. However, relying solely on recycling will not be sufficient to meet the exponential growth in demand. Goldman Sachs has pointed out that mining investments in 2022 were significantly lower than in 2010, indicating a slowdown in the expansion of mining capacity. This lack of investment, coupled with the long lead times for new projects and the challenges facing existing mines, suggests that the supply deficit could widen significantly in the coming years. Looking at recent data, the price of copper has been on a notable upward trajectory. In India, as of April 20, 2025, the price stood at 848 Indian rupees per kilogram, showing a 1.34% increase from the previous day. This continues a trend of generally rising prices throughout 2024 and into 2025. Globally, the London Metal Exchange (LME) has seen copper prices breach the $10,000 per ton mark earlier this year, a level not seen in several months. YChart's data indicates that the copper price index reached $9,739.68 per metric ton in March 2025. A 4.38% increase from the previous month and a significant 12.09% jump compared to a year ago. Macrotrends historical data shows the average closing price of copper in 2025, up to the latest available data, at $4.5810 per pound, already a substantial increase from the 2024 average of $4.2316. Several fundamental factors are contributing to this price appreciation and are expected to keep the trend alive. The most significant is the persistent imbalance between rising demand and sluggish supply growth, as discussed in the previous parts. As the green energy transition accelerates and the demand from sectors like electric vehicles, renewable energy infrastructure, and data centers continues to climb, the limited availability of copper will become increasingly pronounced. Economic growth, particularly in major consuming nations like China and India, also plays a crucial role in driving copper demand and, consequently, its price. Increased industrial activity and infrastructure development in these regions directly translate to higher copper consumption. Interestingly, even factors like the value of the US dollar can influence copper prices. Since copper is typically priced in US dollars, a weakening dollar can make copper more attractive to buyers using other currencies, potentially increasing demand and pushing prices higher. Trade policies and geopolitical events can also introduce volatility and impact copper prices. Tariffs on copper imports, for instance, as have been discussed by the U.S. administration, could lead to higher prices for domestic consumers and potentially disrupt global trade flows. Supply chain disruptions caused by geopolitical instability, labor strikes in major mining regions, or even climate-related events can also lead to sudden price spikes due to concerns about availability. Furthermore, the increasing recognition of copper's strategic importance is leading to a greater focus on securing stable supplies. This is evident in the efforts by Western countries to diversify their copper sources and reduce reliance on dominant players. This geopolitical dimension adds another layer of complexity to the price dynamics. Market speculation and investment trends also play a role. As the narrative of copper as the new gold gains traction, investors are increasingly looking at copper as an attractive asset, potentially leading to increased buying activity and further price appreciation in the futures markets like COMEX and the London Metal Exchange. Analysts at major financial institutions are increasingly bullish on copper's long-term price outlook. Bank of America, for example, has projected copper to reach $10,750 per ton in 2025, citing strong demand, limited supply, and increased investment in energy transition projects. The Chilean Copper Commission, Cochilco, also expects copper prices to remain above $4 per pound for the next decade, anticipating a continued rise in demand outpacing supply. In the short term, any significant supply disruptions or stronger than expected economic data could trigger further price rallies. Conversely, unexpected slowdowns in global economic growth or a sudden resolution of supply chain issues could temper price increases. However, the overarching long-term trend appears to be pointing towards sustained high copper prices due to the fundamental demand-supply imbalance driven by the global shift towards a more electrified and sustainable future. Consider renewable energy sources like solar, wind, hydro, geothermal, and biomass. All of these technologies rely heavily on copper for their ability to generate and transmit power. In fact, renewable energy systems, on average, utilize 4 to 6 times more copper per unit of installed power compared to traditional fossil fuel or nuclear power plants. This is because copper's exceptional electrical conductivity minimizes energy loss during transmission, a crucial factor in maximizing the efficiency and reducing the carbon footprint of these clean energy sources. In solar photovoltaic systems, copper is used extensively in wiring, grounding, and inverters. A typical photovoltaic solar power plant can contain around 5.5 tons of copper per megawatt of power generation. Wind farms, with their massive turbines and extensive cabling needs, can contain anywhere from 2,000 to 7,000 tons of copper. The generators and turbines themselves rely on copper windings for efficient electricity generation. The growth of electric vehicles, EVs, is another major driver of copper demand. An electric car requires significantly more copper than a conventional internal combustion engine vehicle, typically 2 to 3 times more. This copper is used in the motor windings, battery components, wiring harnesses, and charging infrastructure. As the global adoption of EVs accelerates, the demand for copper from the transportation sector is projected to skyrocket, potentially surpassing even the construction sector as the largest consumer of copper by the 2030s. Beyond electricity generation and transportation, copper plays a vital role in the development of energy storage solutions, particularly grid-scale batteries. These batteries are essential for stabilizing the intermittent nature of renewable energy sources like solar and wind. Copper is a key component in the conductive pathways within these batteries and in the cables connecting them to the grid. The IEA expects copper demand for grid battery storage to surge by a staggering 557% by 2035. The expansion of electricity grids themselves is also heavily reliant on copper. Upgrading and expanding power transmission and distribution networks to accommodate the influx of renewable energy and the increasing electrification of various sectors requires vast amounts of copper for wiring and cables. Copper's high conductivity ensures efficient energy transfer over long distances, minimizing losses and contributing to a more reliable and sustainable energy infrastructure. Furthermore, copper's excellent thermal conductivity and corrosion resistance make it invaluable in other clean energy applications such as heat exchangers in solar thermal systems and geothermal power plants. Its durability ensures long-term performance in often harsh operating environments. The International Copper Association (ICA) has highlighted that the energy transition will be a major supporter of global copper demand for decades to come. Their research indicates that the increasing deployment of clean technologies across various sectors will necessitate a significant and sustained increase in copper consumption. It's also worth noting the sustainability aspect of copper in the green energy transition. Copper is 100% recyclable without any loss of its properties. This means that the copper used in today's renewable energy systems and electric vehicles can be recovered and reused in future applications, contributing to a more circular economy and reducing the need for new primary extraction. Recycling copper requires significantly less energy than mining and refining new copper, further enhancing its environmental benefits. Modeling by researchers at the Massachusetts Institute of Technology, MIT, suggests that recycled copper can play an increasingly crucial role in meeting the growing demand for this critical metal in the coming decades, particularly as end-of-life products become a more significant source of secondary supply. In essence, copper is the unsung hero of the green revolution. Without its unique properties, the transition to a cleaner, more sustainable energy future would be significantly more challenging and less efficient. Its widespread use across all key green technologies underscores its fundamental importance and reinforces the narrative of copper as the new gold in this transformative era. Throughout this series, we've built a compelling case for copper as the new gold, a metal whose demand is being supercharged by the global shift towards clean energy and advanced technologies, all while facing significant supply constraints. For savvy investors, this presents a unique set of opportunities to potentially capitalize on this transformative trend. So, how can you, as an American investor, gain exposure to the burgeoning copper market? There are several avenues to consider, each with its own set of risks and rewards. One direct way is through investing in copper mining companies. These companies are involved in the exploration, extraction, and processing of copper ore. As the price of copper rises, the profitability of these companies can increase, potentially leading to higher stock prices. However, it's crucial to conduct thorough research into individual mining companies, considering factors such as their production capacity, cost efficiency, geographical locations, and associated political risks, environmental practices, and overall financial health. Keep in mind that mining stocks can be volatile and are subject to various operational and market risks. Another approach is to invest in companies that are significant consumers of copper. As we've discussed, this includes manufacturers of electric vehicles, solar panels, wind turbines, and companies involved in building and upgrading electrical grid infrastructure. While these companies might not be pure-play copper investments, their growth is directly linked to the demand for copper, and rising copper prices could impact their costs but also reflect strong end-market demand. Again, individual company analysis is paramount. For investors looking for more direct exposure to the commodity itself, there are options like commodity exchange-traded funds, ETFs, that track copper futures prices. These ETFs allow you to invest in copper without directly buying and storing physical metal. However, it's important to understand the mechanics of futures contracts and the potential for contango or backwardation to impact returns. Another related investment area is in companies involved in copper recycling. As the world increasingly focuses on resource efficiency and circular economy principles, the demand for recycled copper is expected to grow significantly. Investing in companies that specialize in the collection, processing, and refining of copper scrap could be another way to participate in the copper story. Furthermore, consider companies that provide essential services and equipment to the mining industry, such as those involved in mining technology, equipment manufacturing, and geological surveying. These companies indirectly benefit from increased mining activity driven by higher copper prices. It's also worth keeping an eye on government policies and initiatives related to infrastructure development, renewable energy targets, and electric vehicle adoption. These policies can significantly impact the demand for copper and, consequently, the investment landscape. For instance, the U.S. government's infrastructure bill includes significant investments in upgrading the power grid and expanding EV charging infrastructure, all of which will require substantial amounts of copper. For investors, it's essential to consider how global economic trends and international trade policies might affect the copper market and related investments. The demand from major economies like China and India will continue to be a significant factor influencing copper prices. Before making any investment decisions, it's crucial to conduct thorough due diligence and consider your own risk tolerance and investment objectives. Diversification across different asset classes and within the copper-related sector can help mitigate risk. Consulting with a qualified financial advisor is always recommended. The narrative of copper as the new gold isn't just a catchy phrase. It reflects a fundamental shift in the global economy. As the world electrifies and embraces cleaner energy sources, copper's importance will only continue to grow. Understanding this trend and exploring the associated investment opportunities could be a key to navigating the evolving financial landscape of the 21st century. That concludes our view on why copper is being hailed as the new gold. We've explored the surging demand, the supply challenges, the price trends, copper's crucial role in the green energy transition, and potential investment avenues. We hope this in-depth look has provided valuable insights for your investment journey. Thank you for tuning in to Business Stories. Join us next time as we delve into another compelling trend shaping our financial future.